Hi, this is Mark Hackett, Chief Market Strategist for Nationwide, and this is Taking Stock.
Counting down to the close, everyone. It is Thursday, September 11th. This is Taking Stock, and I'm Kristen Scholler. We got a lot of news moving the markets today. Stocks in rally mode as we approach the close after August inflation data isn't expected to change the Fed's direction on interest rates next week. The consumer price index data this morning for the month of August showing that those prices rose 0.4% from July and 2.9% from the same time a year ago. While the IPO market continues to heat up, and Angel Studios debuted at the stock exchange today. The independent studio behind religious films like The Sound of Freedom popped as much as 70% after completing its merger with a special purpose acquisition company, or SPAC for short. We'll be talking more about that throughout the show. Here on the floor of the stock exchange, the trading community today is honoring 24 years since the events of September 11th. And today on Taking Stock, we've got a lot to cover. And take stock on, we're going to catch up with Sound Planning Group's David Struczewski, the Harmon brothers of Angel Studios after its debut today. Plus, J.D. Durkin connects with ICE Futures Europe's Chris Rode in London. And of course, we'll have the latest from Money 2020's Scarlett Sieber. A lot of action down here on the floor of the stock exchange. Cheers down here on the floor of the New York Stock Exchange. This is Taking Stock for our viewers tuning in at the market close. I'm Kristen Scholler. And let's take a look here at how the major indices ended on the day. They rallied into the close. You hear cheers. Angel Studios making its public market debut. And the S&P 500 closing at yet another record high. In fact, the S&P 500 up 0.9% on the session, closing near its session high. Small caps outperforming up 1.8% on the day. The NYSE Composite, for its part, up 1.1%. And the Dow Jones Industrial Average higher by more than 600 points for a nice gain of 1.4%. While the gains were broad-based in today's session, that's the kind of market investors like to see. And joining me now with more on the markets is David Struczewski. He's the CEO of Sound Planning Group. David, great to have you on the show today. A lot to talk about, and let's start with this market at a record high. What does that mean for the Fed next week?
You know, when the market's at record highs like this, Kristen, this is not the time that they typically would cut. But we're at a moment right now in history where the Fed is in a tough place. If they cut, markets are going to go on a rip. We're going to ultimately see the dollar get a lot weaker. We're at a 50-year low right now, or weakest start to the year. So I'm a little bit nervous about that. Watching the Fed, though, going forward, it's going to be an interesting thing, because if they keep rates high, ultimately what we have is challenges as it relates to the average consumer, businesses not being able to refinance, not getting rates down low enough. And we're looking at real estate today at 500,000 more homes for sale than there are buyers out there. And so that right now is one of the biggest tells that we're at the end of an economic cycle. So I think there's some rough data is going to be coming out here in the next few months, and these might be highs for a minute. I think we'll get back there again, but there could be some challenges ahead.
Okay, so let's talk about the Fed's dual mandate, right? For
Sure.
so many years, certainly since 2022, when inflation peaked at 9.1% in June of that year. We know that the Fed is focused on inflation. It's also focused on jobs. Inflation has remained sticky, and the data this morning showed us that, but the jobs picture has worsened, and we've seen that via a number of data points, including the claims number this morning. So what position does that put the Fed in?
Well, the Fed right now is in that rock and the hard place moment. But we had 1 million jobs essentially that were overstated last year. So the data has not been clean. Therefore, if the market was rallying on incorrect data, then it should probably also be getting reset right now by the real data showing up. Ultimately, that real data is going to show up. What's the Fed going to do? I think they need to be data dependent, but I think ultimately they're looking for something to break, and then they're going to really start cutting. I think everything, though, points back to inflation being consistent and moving forward.
Okay, let's talk Angel Studios
Yeah.
and the IPO market as a whole, but Angel Studios making a blockbuster debut here at the stock exchange. Exchange
Absolutely.
today. What is this signal?
You know, Angel Studios is a wonderful organization. They brought amazing programs like The Chosen, which my family certainly has watched all of and has really enjoyed. In fact, I can't name one person that I know that hasn't been a fan of that and ultimately been following them. So doing great things, family-friendly content. There's certainly an appetite out there when I guess so many places have gone a different direction.
Yeah, Klarna making a big public debut, of course, earlier this week as well. Just yesterday, that stock popped about 15% in its offering alone. So it does seem like there is appetite out there.
Oh, yeah.
I know you follow the gold and silver market very closely. What are the trades there that you think are the right move these days?
Well, what's interesting is that on 9/11/2001, 24 years ago, gold was at $279. Today, it's better than $3,600. It has far outperformed the S&P 500 this year, and so is silver. But here's the reality. Metal miners are up almost 100%. I've been recommending these because these are alternative ideas that normal 60-40 portfolios don't necessarily have allocated inside of them. So I think that it's really important to recognize that we're at the beginning of what is a commodity super cycle. I think that it's exciting to note that when we can get back to drill baby drill here at home, maybe we've got more strategic resources at home. I think that we're actually reshoring some very important things. If you want NVIDIA chips, you need silver. You want to go smaller, you need silver. You want data centers and AI, it all leads back to silver.
Okay, so what does this mean for the cryptocurrency market? How does that factor in?
Cryptocurrencies are doing really well right now. You know, Bitcoin's gone on a real run. We're looking at an altcoin season that's starting out. More think function of how things are meeting the real world. What we're looking for are real ideas, real companies, real ways of making things more efficient, lower cost, and ultimately, coins like Ethereum, XRP, Ripple are going to do very well.
All right, David Struzeski, CEO of Sound Planning Group. David, thank you as always.
Pleasure's mine, Kristen. Thank you.
Great to see you.
You too.
All right, let's take a little walk down here on the Florida Stock Exchange. You're going to see a massive crowd behind me. Look at this. This is the crowd in the house for Angel Studios, and we're going to take a little walk to talk more about Angel on this very program. So let's head down this way. Howie, the cameraman extraordinaire, is going to follow me. And as you see, a lot of happy faces down here. The stock up 80% just in today's session, which is pretty impressive. You might know it for some of its well-known films. It is an independent film studio, but it did have a major blockbuster, in fact, in 2023. So we'll share that. We're going to head on over to the Trading Post to see where exactly it finished on the day. You see the Angel signage behind me. So I'm going to head over this way, and Howie is going to zoom in to Angel. We'll get that nice and big on the screen here. Ultimately, it looks like an 8% pop on today's session, $13 a share on that stock. Again, the ticker symbol is ANGX. Has a unique business model, turning to the 1.5 million paying members of its Angel Guild to help decide which production it makes. And it popped as the Provo, Utah-based studio completed its SPAC merger with Southport Acquisition. It also announced a $100 million credit facility with alternative asset manager Trinity Capital. And its film, Sound of Freedom, was a box office hit in 2023, raking in $251 million. A pretty impressive day there for Angel Studios. Centene, another stock that we've been following here. We can take a quick look at Centene, and what I can tell you is as that stock popped, let's see here, CNC 9% on the day. At one point it was up double digits. The health insurer reaffirmed its profit forecast and said quality ratings for its Medicare plans were in line with estimates. Shares of other health insurers rose on the news too. In July, this company said it expects to be able to raise 2026 rates charged to states for health plans and have better profit margins. A lot of action down here on the floor of the stock exchange. I hope you can catch your breath. Earlier this week, JD Durkin caught up with ICE Futures Europe President Chris Rhodes in London. We're going to catch our breath and take a look at this.
Joining us now for a one-on-one interview in London, England, is Chris Rhodes. He is the president of ICE Futures Europe, and we're very grateful for your time. Thanks a lot for joining us.
Pleasure. Thanks for having me on.
So ICE maintains the world's largest energy derivatives market. First and foremost, for a bit of an introduction to anyone who might be a bit unfamiliar, talk to me about what really most excites you about the underlying business and where you feel ICE is situated in global derivatives.
Yeah, it's a really good question. I think that the real differentiator for ICE is the breadth of our market. So we operate global markets across energy, across interest rates, across equity markets. And I think we touch every part of the economy. So it doesn't matter what's happening in the world, what news items are the most topical of that day. There's something in the ICE market and the ecosystem that's adding value to our customers, helping them to manage risk, and also helping them to navigate a fairly uncertain backdrop at the moment.
How would you describe global interest in these products, and have you seen global interest evolve in even just the last few years?
Well, it's been a really strong year for ICE. It's coincided with record open interest across the ICE derivatives markets at 106 million contracts. There's been broad-based growth in global gas, in global crude oil and refined products, and also in our interest rate markets, where what's been top of mind for people recently is the fallout from trade tariffs and the potential for interest rate cuts. And I think that's really been the drivers behind our business this year.
Yeah, one of your newest kind of sort of evolutions that you and the team have expanded into includes battery materials. Have that or any other things that you've taken into consideration surprised you to teach you that there is actually an addressable market for some of these core investable products?
Well, I think it's been really a positive. All of our products have been positively received across the board. If I was to pick out a couple of key ones, I think really the options segment of our business is underappreciated. Over half of the open interest of the company comes through the option markets. So whether that's in global energy, in gas, in power, in crude oil, or in our interest rate products, that's been I think that's really resonated with our customers. And the investments that we've made in liquidity, so making sure that those markets are liquid in all times, in all market conditions, I think is the thing that resonates the most. Of course, there's specific products, whether it's battery raw materials, whether it's our carbon markets, are always new and novel, and people are interested in that. But really, it's that broad sort of set of liquidity that keeps our customers coming back.
Yeah, we talk a lot about this back in New York. This the state of tariff and trade policy. You alluded to it there, Chris, a moment ago. How has ICE and how have investors here in the UK gone about approaching that general theme and environment of trade policy uncertainty?
Well, fundamentally, we're here for risk management. So, our purpose is to make sure that our customers are able to manage any circumstance, so whether that's trade uncertainty or anything else. And again, I think it's that breadth of liquidity that has meant that people are able to dip in and out of the market and fundamentally change their mind. I think, to put it in really simple terms, we give the ability to our customers to change their mind on their investments. So if they feel less positive about something, they can hedge their price risk. And I think that is really what's been driving our business this year.
Welcome back to Taking Stock, everyone. We are down here on the floor of the New York Stock Exchange here at the FinTech Studio set. And time now for a few FinTech, crypto, and AI headlines, aptly fit. Bitcoin trading around $114,000 a token, while Ethereum is near $4,400, both edging up after softer inflation data boosted rate cut expectations. Next up, driven by big tech's heavy investment in AI infrastructure and demand for more computing power, U.S. data center construction spending hit a record $40 billion at an annualized rate in June, up 30% from the same time a year ago. Finally, the owner of Zelle Early Warning Services is exploring a stable coin aimed at retail bank customers in what could be a major move for traditional finance into digital payments. All right, Josh is going to hand me the mic, and so you know what time it is. Time for a little interview. This is a big one because Angel Studios went public here at the New York Stock Exchange via a SPAC merger. And joining me now with more is the founder and CEO of Angel Studios, Neil Harmon. Neil, welcome to the show, and congratulations on a great debut.
Thank you, Kristen. Great to be here.
It's great to have you, and I want to hear in your words for our viewers what Angel's mission is.
So Angel is an answer to Hollywood gatekeepers continually getting out of touch with mainstream audiences. And in the last few years, the Best Picture went to Anora, to Moonlight, to Parasite, when our families as founders and millions of other families who have joined us, we're looking for the 21st century version of 12 Angry Men or Swiss Family Robinson or Sound of Music. These are the values-driven stories that we want. And there's 1.5 million members of the Angel Guild who are greenlighting everything that comes to Angel.
Talk to me more about the Guild and how it's developed and how it leads to people having a say in the content that is developed as you reference.
So the Angel Guild members, they can sign up for a membership fee, And this does three things for them. They can vote on everything that comes to Angel. I can't, as the CEO of Angel Studios, release anything without their permission. Number two, they get to show up in theaters. They get complimentary tickets to go to every Angel release. Number three, their membership fees help fund future filmmakers who want to tell stories that amplify light.
And so where are you going to take this company now after this deal is completed here at the stock exchange?
Great question. So, you know, we're in our car. We've got a long ways to go to reach our mission. We got a full tank through this process, and we're on our way.
And I think people might know of Angel Studios, or Angel for short, if you will, based on the 2023, what was a blockbuster hit. And so talk to us about that and how that changed the game for your company.
Well, it's just a testament to the Angel Guild and their ability to find the diamonds in the rough. We had His Only Son that hit number 3 in the box office, our first theatrical release. Then Sound of Freedom hit number 1, and it surpassed Indiana Jones and Mission Impossible in the domestic box office. And earlier this year, they chose an animated film that became the largest biblical animated release of all time. So super exciting. And in the future, like the Guild's choosing all kinds of genres. We've got Michael Chiklis, who's in The Senior, it's a football movie. We've got Kevin James in Solo Mio, it's a romantic comedy. And we've got Young Washington that's coming July 4th, 2026. And we're just really excited about the future.
What else is next for Angel?
Well, our goal was to hit 1 million Guild members before we listed. Well, we're at 1.5. We beat that goal substantially, but now we need to get to 5 and to 10 million members, and that's what we intend to do.
Neil, thank you so much for joining. Congratulations again for this major moment here at the New York Stock Exchange.
Thank you, Kristen.
Of course, that was Neil Harmon. He's a co-founder and CEO of Angel Studios, joining me here on the floor after ringing the closing bell to celebrate that stock merger. And viewers, you do want to stay with us because we're going to have much more after the break. Join us, of course, in honoring the victims of 9/11. That's something that the trading community and the NYSE community here today are doing throughout the session. Welcome back to Taking Stock, everyone. We're down here on the floor of the New York Stock Exchange. Stocks ending at a record high today, and we got a lot of deals in the works. So let's get to startups, raises, and rounds. First up is Nebius, raising $3 billion to expand its AI cloud business just days after closing a $17.4 billion deal with Microsoft. Next up is Alibaba raising $3.2 billion in the biggest convertible note offering of the year as Chinese tech giants race to fund AI and cloud expansion. Finally, AI training startup Mercor is in talks for a Series C round that could value that company at more than $10 billion. Well, speaking of deals, I'm pleased now to be joined by some members of the Bell Ringing Group. They're here from Angel Studios. In fact, they are co-founders of this independent studio. Jordan Harmon, Jeffrey Harmon, brothers, of course. We've got the president and the chief content officer. Gentlemen, welcome. Jordan, we'll start with you. What does today mean to be here at the Stock Exchange to celebrate this SPAC merger?
It's pretty exciting, but at the same time, you know, this is just a moment in time for our history. Angel was started as a response to the gatekeeper problem in Hollywood, that they're very out of touch with the broader audience. And so we've started Angel to solve that problem, and we're excited to do this for decades to come.
Jeffrey, talk to me about the ticket model here. How does that work?
Well, when you're an Angel Guild member, there's 1.5 million Angel Guild members, and they choose all the movies that come to Angel Studios. When you're a paying member, you get 2 movie tickets to every movie to see them in theaters, kind of like a movie pass, but for Angel Studios.
Wow, and Sound of Freedom, of course, a big hit in the theaters. That was in
Yes.
2023. Jordan, I want to turn back to you and tell me more about the crowdfunding element. How has that played a role in the growth of Angel?
So it's a unique model in that we've decided, instead of just having a few executives in LA or New York make all the decisions for entertainment, we've given that power over to our Angel Guild members, 1.5 million members and growing, and they get to decide and veto anything that comes into the ecosystem. I, as a president, or Jeff as the chief content officer, we can't greenlight something unless the Angel Guild says yes first.
Interesting. Jeffrey, I do want to go back to you and talk to me more about some of these viral ad campaigns. What has worked from a content perspective?
Well, if you get a great movie and you put out scenes from that movie, it sells tickets. And so we're finding that we take the expertise that we had pre-Angel. We did an ad agency where we did Poopery, Squatty Potty, Purple Mattress, Lumi deodorant, viral ad campaigns, and we've learned that selling a ticket in the box office is not that different than selling a Squatty Potty.
Interesting. So I see here, Jordan, too, previously you helped grow Cove to a $100 million business. Lessons learned as you now try to take Angel to the next level.
Yeah, so one of the big things that we wanted to solve with Cove is we wanted to be able to give a DIY home security solution for families all over the nation, but it was building a subscription service that really bolstered my understanding of how churn and all the different metrics work in this space, and so that's leveraged in a really meaningful way to launch the Angel Guild to where we've grown from literally 500,000 members at the beginning of the year to over 1.5 million today.
What can we expect next from a content perspective, Jeffrey?
Coming up in a week, we have The Senior. It's a story with Michael Chiklis, and it's a true story of a guy who went back and played college football at 59 years old. Then after that, we have another movie called Truth and Treason. It's about a 16-year-old boy in Nazi Germany who pushed back against Hitler. And then soon after that, we have a movie with Kevin James as a rom-com called Solo Mio.
I want to hear, and two, finally, Jordan, about the business model going forward. What do our viewers need to know now, of course, that we've seen this deal happen at the stock exchange?
Yeah, the business model doesn't change for us in a meaningful way. It's actually the reason we went public the way we did, is it allowed us to keep control of the company and the vision. Our investors, we had over almost 70,000 investors over the last 10 years who have supported us from our community. And so we wanted to make sure that we fulfilled with that mission to tell stories that amplify light and that are very values driven. Was this debut what you would have expected, Jeff?
I haven't even looked at the stock price today, so I don't know. I've just been in interview. I'm not thinking about the stock price. All I'm thinking about is this is the starting line of a very long effort to build a studio that can change the world. And so as long as we just perform, it doesn't matter what happens today or tomorrow, which I actually don't know what happened. I guess you could tell me, but so yeah.
We're excited for the next step.
Yeah, well, we're excited to have you here at the Stock Exchange. Thank you again, brothers, co-founders of this, President, Chief Content Officer, Jordan and Jeffrey. Thanks again.
Thank you.
Yep. All right, everyone. That was a fun interview. And stay with us because after the break, a buy now, pay later breakdown from Money 2020's Chief Strategy Officer, Scarlett Sieber. We'll have that here on the floor of the Stock Exchange.
Welcome back. I am Scarlett Sieber from Money 2020, and welcome to this week's special IPO edition of Jargon Translator. It's been Klarna's IPO week, so of course we're going to be covering the infamous BNPL, or Buy Now, Pay Later. BNPL may sound like a utility company, but it's actually one of the most unique yet somehow obvious fintech innovations we've seen in the last decade. You're at checkout, you've got a cart full of stuff you clearly need, very important things to you and your family, like a pair of new shoes for you and a new TV for your family, your friends, whoever. Major key family things only, of course, nothing else. And suddenly, a little pink button pops up. Pay in 4, no fees, no interest. And you're like, wait, I can take this home now, pay later, and it costs me nothing extra? What is this? Santa? Is that you? No, it's not magic, it's not Santa, it's Buy Now, Pay Later. Companies like Klarna have basically reinvented layaway, but instead of your grandma waiting 3 months for her toaster, you walk out today with those kicks and sneakers you could not afford yesterday, and I love a good pair of kicks. Sound familiar? It should, because we've been using credit to buy things for decades. But the BNPL model is unique, especially in its fee structure. Let's break down how this works. You got $200 to buy a jacket, okay? Although you don't actually have 200 because you only got 50. So you buy a $200 jacket and you pay $50 today. Then $50 every 2 weeks over 6 weeks. And assuming you pay on time, there's no fees and no interest, which of course makes the inverse true as well. If you do not pay on time, there are fees and there are interest. It sounds like the deal of the century, and to you it might be, but Klarna isn't doing this because they like you, although they're a friendly brand, so of course they probably like you. But Klarna is doing this because retailers pay them, and herein lies the true genius of the BNPL model. Stores pay Klarna a cut of the purchases, somewhere between 3 and 6%. The incentives are straightforward. BNPL gets more people to buy and decreases the friction at point of sale, which inherently means more sales. Think about it. How many times have you looked at a $200 jacket and thought, too much? But 50 bucks, just like that, a carton of eggs and a gallon of milk with inflation, right? Klarna swoops in and you click yes. The store makes a sale, Klarna takes a slice. Boom, 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 everybody's happy. Well, except maybe the credit card companies. For shoppers, it feels like freedom. You're smoothing payments with no credit card interest. For retailers, it's conversion gold. More people hitting that buy baby buy button. And for Klarna, it's billions in revenue, a path to IPO, and the ability to say, see, that can be fun. I never thought I said that sentence, but here we are. So next time you see Pay in 4, remember, it's not a gift from the gods of finance. It's Klarna fronting the cash, the store paying Klarna a fee, and you tricking yourself into thinking that $200 isn't really $200. That's BNPL for you. Layaway for the TikTok generation. And that's your jargon translated. Anything else you want us to share? Any other things we want to break down? Put them in the comments and we'll get back to you. Until next time.
All right, everyone, that's just going to about do it for today's show of Taking Stock. Thank you, as always, for watching. And, of course, for our viewers, today is a day of remembrance and, of course, honoring the victims lost on 9/11 just 24 years ago. The trading community and the NYSE community is thinking of them as always. And we will see you back here, same time, same place tomorrow, down here on the floor of the Stock Exchange. Thanks for watching.